Happy Wednesday morning, Service Business Mastery Podcast fans and those watching live. We are back with a guest today that is going to talk about something that I don't think can ever be talked about enough in your business, and that is talking about pricing and your numbers. All too often, this is one of the largest things that companies get wrong, and they get it wrong right from the get-go because they're small. They don't think they have a lot of overhead, and they don't price themselves appropriately. So they have to continue to chase that hamster wheel of finding the next new job. So
Josh, whenever you talk to people, what's the reasoning behind the pricing that they have?
Well, they think it's just them in a truck, so they only price themselves to have no overhead. They don't price themselves for growth.
You know what I hear most often when I'm talking to people is, I can't charge any more than that because that's how much everybody else around here charges.
Well, my favorite is everybody asking in these Facebook groups, well, how much do you charge for Freon? Everyone's like, well, I'm going to charge the same thing because that's what everyone's charging. That's the going rate.
I get it. Well, I get the idea, and we'll talk to Jim more about this too, but it's good because we can sound ignorant before the expert comes on, and then he can correct us. But whenever I think of that, I understand why they're asking what they're asking, because I kind of thought the same thing. I still can at times think the same thing. And that's like almost as a loss leader, because we know how many times somebody calls and says, how much is Freon? We're like, well, it's more than that. And you try and have this conversation, but there's some people that are just calling around and want to know the price of Freon because their cousin told them or their uncle told them that you need to be, shopping the price.
You need to recharge it.
Yeah. And see, the thing about it is some people would argue, well, that's not my client. And I used to have that same exact mentality until I went out on a call and I was like, well, how much are you willing to pay for Freon? And they're like, well, I don't know. This person said it was $95. This person said it was $85. This person said it was $375. So I feel like they're ripping people off. And I'm like, okay, well, then let me come out there for $75 a pound. And we get out there and sell them a new system. So it's like, they're not trying to be cheap. That's just what they know as a consumer to ask that question.
Well, the customer's uneducated. They don't know. They don't realize that the fact that it's a closed system, and if they need Freon, there's a problem, or refrigerant. Like there's a bigger problem at play. They don't know that. They just think, well, I'll just get a recharge so it works.
Our girls try to educate people on the phone, but sometimes, I mean, you know this, you talk to people and it's like, okay, thanks. Like, I don't really want education today. I just want to know the price of Freon, and so it's like, well, shit, I'm trying to educate, but at the same time, let's get out there and then build the relationship and just really wow them with our service. And then that's why we have financing. If you don't have cash on hand, which most people don't have that much cash on hand, we have financing available and sell that system to them. So
yeah. And this is what Jim, not necessarily the Freon question, but as a larger concept, he's going to be talking about pricing. He's going to share some things on screen, Excel documents and things like that.
I'm excited.
Might even have some free resources so you guys can actually start put together your pricing. If you haven't already, and honestly, if you have and you haven't touched it in over a year, you need to look at it again because things have changed drastically in the last 12 months. So we'll be right back with Jim.
Yeah.
Are you looking for valuable business advice to reach that 7-figure revenue mark? Do you want actionable tips to properly navigate through every business challenge you encounter along the way? Let Tersh Blissett and Josh Crouch be your guide in getting you to the top here at Service Business Mastery. Tune in as they sit down with world-renowned authors in business, leadership, and personal growth who share valuable insights about management, marketing, pricing, human resources, and so much more. Let their nuggets of wisdom gold guide you in owning a thriving, profitable, and ever-growing business. Here are your hosts, Tersh and Josh.
Welcome, Jim.
Good morning, guys. How are you all doing?
Good. How are you?
Fabulous. I'm freezing my ass off, but the rest of y'all are probably fine.
Well, I'm on location here in my hometown of Lexington, Kentucky. I live up near Cincinnati. Hooday!
Oh,
I throw that in there for all you.
By the
all
time
you
this
guys
actually
aren't in the
gets out and
playoffs.
airs, they're definitely going to be the Chiefs are going to annihilate them this weekend. So,
But it's a balmy 9 degrees here in Lexington. So
I gotta check the thermostat again, or the temperature outside, because when I took the kids to school this morning, 2 of my kids had shorts on, so pretty sure it was in the 50s.
anyone that's watching that's what I'm dealing with right now.
Right.
Oh, yeah,
Negative 15.
We have a high of 60 degrees here today. So
yeah, the kids wear shorts down to about 20, so it's all good.
good
So,
point. That's a good point.
New school. You guys and the millennial and all that. And I'm a Gen Xer. I think my kids think I'm a boomer, but I always have to negate them. I was born in 1969. I'm 5 years from the boomer age.
There you go. Holding strong.
So Jim, you've been in the industry a long time. So why don't you kind of take us through that history and what has brought you to this point today where you're consulting for other people?
Sure. Well, I started at the University of Kentucky in engineering, mechanical engineering. And the summer after my freshman year, I was fortunate enough to make a connection with an alumnus of the fraternity I had joined. They had just started a mechanical contracting company. And they did plumbing and heating. So my first introduction into the mechanical realm was in the plumbing side. And I worked actually where the Bengals used to do summer camp up at Georgetown College in Georgetown, Kentucky. Redid all their facilities, and I got into the mud and had the waders on and I pretty much carried pipe because I was a big guy. Mm-hmm. So and laid it down for the licensed guys to put all that stuff in. But it intrigued me from an engineering perspective on how things went together, how water flowed, how all these things came together to make a big system, right? And then I got to know some people on the supply side and the wholesale side. And when I graduated, I went in the wholesale business. I didn't take the normal route, because I continued to work there all through college in the mechanical contracting. So I learned some business, and he's retired now, but my mentor, it was, Scott Davis, and, Scott owned, it's still called Davis and Plowman Mechanical here in Lexington. Scott has been a mentor of mine for years. So, I've been in the industry for a little over 30 years, from boots on the ground to where I'm at today. And, I went into the wholesale side of it and worked my way up and was able to spend some time in Indiana and got my MBA up at a little university called Notre Dame.
Little tiny one.
Yeah, a little tiny one.
I don't think anyone listening's heard of that one.
No, probably, especially the Buckeyes. So I feel about the Buckeyes. Anyway,
I knew there was going to be a Buckeye drop.
And the Louisville Cardinals. By the way, they're looking for a new coach right now. Anyway,
so my wife, she went to the Ohio State University. So,
well, this episode's over.
Yeah.
Well,
we'll see you guys next week.
I almost wore her Ohio State scarf, but no, I was gonna sweat. I was like, oh, no.
It's okay. It's okay. So I came back and I was actually went to work for the R.E. Michael Company and got stationed there in Cincinnati. And what I did was I got tired of the corporate arena, and I had a fellow engineering student of mine that was running a business, wasn't running it successfully, and decided to quit what I was doing and invest in his company and get operational control.
So let me ask you some questions about your history and everything that you went through. We've all seen, if we were in any of the HVAC Facebook groups, we've all seen you chime in and help out a lot of people. Some people may not know who you were or anything and understand, your background of education and everything. So I want to really kind of dive into that a little bit, almost to help people understand that you are an expert in this field and not just a guy who worked at a company or ran a company that did $500,000 or something like that, because there's a lot of gurus out there that have they never actually been successful in a business. But did you ever use your mechanical engineering degree after the fact? The reason I asked that particular question is I went to Georgia Tech and never used anything that I learned from, I wouldn't say never used anything I learned, but I was never an engineer, quote unquote, an engineer. Went straight into the HVAC industry and was working for a service business and worked my way up to running that company. Is that a similar story to you? And then your MBA, like how long ago was it that you did your MBA through Notre Dame?
No, 96. So,
Gotcha.
So basically the wholesale companies that I've always worked for, I tried to be different because the box in the wholesale business, a box is a box is a box, right?
Yep.
Just with a different brand.
Mm-hmm.
And we were trying to sell a service. So I loaded up on, because in graduate school, whether you're in law school, MBA, dentistry, medical, the one thing they don't teach you how to do is to own a business. Right. So, but what they do teach you is how to strategically think that everything flows in a way that is a very process and systematic way.
Mm-hmm.
That's where the engineering background comes into play, because as you know, Tersh, in engineering, everything has a process.
Right.
Everything has a flow chart of the way things flow. So when I was in sales, which again, engineering, you see sales engineers and things like that, but typically they call sales engineers for guys that had liberal arts degrees, right?
Yeah. Mm-hmm.
So, I enjoyed the interaction with the relationships. So I basically learned through, dealer classes and things like that, how to price. And,
Gotcha.
You have to learn something from somebody.
Oh yeah, absolutely.
Right. And I learned a lot from my mentor because, they were in the commercial realm of mechanical contracting, and that's a minimal. There's minimal margin for error in the new construction in commercial, right?
Mm-hmm.
Those guys are only making probably 6 to 10% net profit, at the end of the day, but they're doing these and the cash flow is not there, right? So, that's where I learned a lot. But you know what? I knew I needed help, and that we needed help when I invested. So we hired a coach.
Okay.
We hired somebody that had been to where we're wanting to go.
Yeah, that's the biggest thing that I find is rather than getting, failing on your own, like learn from other people's failures and the experiences that they've gone through and things that they've learned from other mentors. Because like I have several mentors, Al Levy, Mike Aguilera, like tons of people within Tommy Mello. These guys, they're great mentors, and these guys have all learned from people like Tommy introduced us to Al and everything else. So you could, it's almost like compound interest in your investments, because you're learning everything that they've learned from everybody else. And so it's just a wealth of knowledge there. I wholeheartely believe in having a mentor and a coach.
Right. And that's where we said, hey, because as a business owner, it's like being married. Okay. Yeah. You're emotionally and having kids. You're emotionally involved in the relationship with your business that you don't see the forest through the trees.
Oh yeah.
And where that was what was able to be brought to us was where was our flaws, and where did we need to improve? And it wasn't like we were going to flip the switch tomorrow. If we improve, the mantra was if we improve 1% every day, the compounding interest is huge.
Oh yeah,
Right?
absolutely.
And he made a comment to me, and it's funny because Scott did the same thing. And you know, I always say, what does a successful company look like to you?
Mm-hmm.
And I didn't know how to answer that question.
That is a really good question. And for anybody that's listening to the show, I challenge you to ponder that, because I've been asked that same thing. And I was asked that from a mentor of mine, a friend, Jesse Cole, who owns the Savannah Bananas. If you haven't heard that story,
Definitely look it up. It's a great
look
story.
It's an amazing story. But Jesse asked me, he said, what's your goal? And at what point do you find that you're going to be successful? And I was like, oh, Jesse, I don't know, man. I'm just trying to put out fires and make it to the end of the year and reach the target that we set for the year. And he was like, just stop and think about that. Stop and think about at what point is successful. For me, at that point in my life, it was just, okay, let's not live paycheck to paycheck. Like, I want to have, 6 months worth of bills, in my savings account, like, or something. Like, I don't want to be stressed out about money was the biggest thing for me. Like, that's in my mind at that point, that was successful. But then, that changes over time. And so I challenge you as a listener to stop and even pause this right now and just think about that question. That's a big question right there, Jim.
And here's the answer that I got from them. It was amazing that both of them answered very similar. And they said, I know that my business was successful when it operated and ran without me in it.
Oh yeah. That's what I'm talking about.
That's so true. That's funny because Tersh and I have been talking about this book, Replaceable Founder by Ari Meisel.
Yes.
And some of it's automation, it's systems, it's automation, it's delegation, it's all these things. But the key point is that getting freedom back in your life. But I think you kind of, a different twist on that is that's when your business is successful. When you can go away for a day, a week, a month, if you want to, and your business doesn't suffer. You have all the people in places. They know how to handle any problems with customers that come up, bad reviews, callbacks, all these things that come up, and they can handle it without you having to stick your finger in it and touch it.
Have you read or listened to the book Clockwork by
yes.
Yeah, so a buddy of mine wrote that in several years back, and that he challenged me, okay, so 24 months from now, can you take a full 18 weeks off? I think it's 8 weeks off. 8 weeks, not 18 weeks. Good Lord, 18 weeks. Yeah, 8 weeks off, because it was, by then you've gone through a full cycle of AR, AP, you've gone through all your payroll cycles and everything else. And now when you come back, is it still there, or
is the place is it on fire when you get back, or is it functional?
Yeah.
Right. And then the other things that they had said, and again, when you most of the, earlier you all had said that, most of it's one guy. We call it, and it's no disparage to the one person company or job, is it's chucking a truck.
Yeah.
Right. And they own a job at that point.
Right. 100%.
That's pretty much what they own. And, I was always told a job is just over broke.
True story. That is true. Right? That's a good point.
So and a lot of times, we're going to segue into this pricing in that, as a business owner, you have to have a different mindset. Your mindset has to be totally, totally different than what you have ever were taught anywhere for working for somebody or working with somebody. You have to have a different mindset. And it's hard because change, number one, is hard, right? But it's also fear. Fear. There's a saying that I heard at one of the things that another coach had mentioned, his colleague said, false expectations appearing real. Oh, yeah. Mm-hmm. That's what fear is. Yeah. I try to take a look at a lot. I come from my family. My dad was a World War II vet. My brother was in the Marines, Special Forces. And, and I've heard Simon Sinek does a lot of nice talks. about things and how. But if we take a look at the military, aside from what their major objective is, they manage processes and systems and lead people.
Jim, that's a great point that you make, and I know that you have a little bit of background with what I'm about to say, so that's the reason I'm gonna interrupt you on this. But we in Savannah, we have every branch of military, even the Department of Transportation, Coast Guard, and we get people that come on board with us, and they are like used to military processes and procedures. I mean, Julie's still, she's a captain in the Air Force still, in the Air National Guard. And so she understands it whenever we're talking to new team members that are coming in from the military. But it is a real challenge when we bring on new team members that they are used to. When they see policies and procedures, it's every single step. Super redundant. And then for us, it's like, it's 80% there. And so you have 20% worth of interpretation. And some of that I did on purpose because I didn't want us to be absolute robots. And some of it is I just haven't finished it yet. And it's on me 100%, so and I'm 100% good with, owning up to that. But it's crazy how much people deal with when they transition from the military into civilian world, and then go to businesses that
have no
policies and no processes written
Show
down.
up, here's your calls for the day, good luck, we'll see you at the end of the day.
Exactly. So yeah, that's, I know you talk a lot on culture and everything else too, so yeah, I wholeheartedly believe and feel you're right there.
Right. And the thing is getting, we're going to segue into knowing the numbers, but people, the business owner, again, he doesn't want to know because he's made $30 an hour.
Yeah.
As a technician or things like that. Well, he doesn't really know. He just thinks that you can go out and just charge that, right? Or charge what his old boss
Or you can
did.
Charge a little bit more than that so he can take home $30 an hour.
Right.
Yeah.
So, and your all's discussion earlier about, here's what I will say. You have regions of in my experience, you have regions of the country that have different costs of living.
Yes,
right?
Very much so, 100%.
Because I see, I use your all side as an educational piece for me because I always want to learn.
Yeah.
I never feel like I know it all. Never going to. So I find it very intriguing that the guys out west can charge $25,000 for a system when back here in the Midwest they're charging 13 or 14 for it, right?
Yeah.
And
or
there
3,000.
comes a point in time where what can the market bear? Because I've seen companies price themselves out of the market before.
Yeah, that's a good point too. Yeah.
And that's why it's so important to know the numbers. But here's the thing. And Josh, if you can put up the 3 rings.
Yeah, give me 1 second. Let me pull it up.
But this is one of the things these are the things that I try to accomplish when working with a client is at the end of the day, we started our business to have a different life, right? A better life. And I tell them, we're going to focus on you making money, but we're really going to focus on getting you here to freedom. Right? So in order to get to freedom, you got to have confidence. Well, in order to have confidence, you have to know your numbers. You have to have the right clients, profit, time, and delivering quality. So now let's step over here because it all starts with numbers.
Mm-hmm.
If you can't price yourself correctly, then if you price yourself incorrectly, you're going to go out of business quicker. If you sell a lot, I've got it in volume. Well, that just shows me you're going to probably run out of business. You're going to end in business quicker than what most people would do.
So,
Jim,
go ahead, Josh. Go ahead, Josh.
I was just going to say, I think one of the biggest things that I mean, for the last 13-ish years, things have been on an uphill trend in the business. And in the last 2 years, especially, I mean, it's been a boom for the home service space.
Sure.
That's not going to last forever. So right now, money's good. Business is good. Everybody's growing. Everybody feels like they're untouchable, right?
Right.
But we all know at some point, and it could be soon with the way inflation's going and everything else, where we're going to have a downturn and people are going to start saving that money, and the housing market's not going to be what it is. And knowing those numbers is going to allow the companies that actually go through these exercises that you're going to share and stuff are actually going to continue to operate and continue. They're going to be the ones that are actually going to be the ones way ahead of the game come, let's say, 3 years from now, when a lot of these guys that don't know their numbers they're going to go under. They're going to go back to work because they don't have enough clients. They don't have the right stuff in place.
So with that being said, Jim, let me ask you these two questions really. For people who don't know their numbers, or maybe they're just kind of winging it based on like where they were before, like they knew what their sold hour was where they were before, so they just pretty much plug the same sold hour in. For those people who don't know their numbers, how do they find their number? How do they know what their sold hour should be or their sold day should be? And then what happens when we run our numbers and the capacitor that we used to sell for $125, all of our competitors are selling the capacitor for $125 to $225. When we do our pricing, we see that the capacitor is $375. Like we just like, it's like, oh crap, like I have to charge way more than what I used to charge before. Is there a way that we can reduce that price by doing something else somewhere else, or are we just going to have to muscle through until we have enough people to cover the additional overhead that you have?
Right. Great question, Tersh. So the only two ways that I know of to reduce that cost, right, is to add capacity. Because let me go back into explaining how you got one guy chucking a truck, right? 261 days a year of capacity, working days.
If they want to have a life
if they want to have a life. So now you subtract the holidays out of that. So what's that, 8 days? So now we go down to 253, right? So what I'm getting to is that if I only want to work 180 days out of the year, I have to price accordingly based upon what how is my billable efficiency, right? And there's things.
And how do we figure the billable efficiency? I mean, you hear rule of thumb is like 55% efficient, blah blah blah. But that's also
everybody's different.
That's also exactly. Everybody's
some
different.
Some guys don't mind running 10 calls a day. Some guys only want to run 3.
So here's what I have found to be on the technician side, right? So on the technician side in the service world, if the technician is doing what they're supposed to do, 4 to 5 calls a day is the maximum, because they want to give their utmost attention to that client. Because what I'm looking for, and knowing my numbers, because I'm going to tell you about KPIs later on, is about average ticket, right? And then average flip sale to the install department, right?
Yeah. So
what we need to do is we need to find out the direct cost of what the job owner is. If he wants to make $30 an hour, he's still going to have to pay taxes.
Yep.
Right. He's going to have to pay gas. He's going to have to pay.
And here's one thing. Sorry to interrupt you, Jim, but really fast. I want people to understand what you're saying, what you're getting into, the overhead expenses and whatnot. If you say I'm working out of my garage, if I hear that one more time, if I hear my truck is paid for, so that's not an overhead expense, I'm just going to pull out whatever remaining hair I have left, because
and it's not much.
It's really not much. But it's one of those things where like you are going to have to buy a new truck one day. Mm-hmm. So price yourself now as if you're paying for the vehicle. So then you can even potentially have that additional cash flow so you don't have to use it up. If interest rates go up, if something happens, you have that cash to just purchase a vehicle. Or, I mean, I don't always advocate on doing that because it's so cheap to get loans right now, but there are times where it's not, and you might be better off to buy the truck outright. Same for you're working out of your garage. At some point, are you going to work out of your garage forever? Like for me, yes, that's our target, is to stay remote. And we're doing other things we spend money in other areas.
But either way, you still have the storage units and you still have
Exactly.
the inventory in the storage units. So there's still
Right.
overhead there.
Exactly. And if you want to have a warehouse or a shop, I mean, around here for a decent sized place, it's about $2,500 a month. So even if you're working out of your garage, you should still be figuring in that $2,500 a month.
Correct.
Okay.
Correct.
Keep going, Jim. I just
Right.
wanted to butt in on that.
So there's a direct cost per man, and then there's the overhead burden that each man will carry onto that, right? So in theory, what happens is when you increase capacity and your overhead doesn't change, it might change just a little bit, but then that cost per hour comes down.
Yeah.
Okay. But again, you got to be careful because all that unapplied time, unbilled time, dumps right back into overhead. So that's where we talk where we talk about, those things of if people aren't tracking their own time, the easiest way to get into this habit, we're creating a habit now, even with the one-man operations, right? Track your time. And with the automation and all the apps now, you can automatically do and figure out what your time is on everything. Right?
I think that I wholeheartedly believe that every person should track their time for 2 weeks, at least once a year, so that you can see, like, am I actually productive or am I just busy?
Bingo. Productive, busy word in my company. When a client walks into my door, I walk into theirs. We get rid of the word busy. We don't glorify that word.
Absolutely. I'm right there with you.
Right. So we look at the gross, what we call gross profit per man day. Right. Yeah. We also, where I see some issues is to say, okay, in pricing, we know that we don't have 3/4 days. Right. Mm-hmm. So if you have 2 guys on an install, which should be the case, you're going to have at least 16 man hours tied up into that job.
So repeat that one more time for me.
So let's say that so Tersh, let's take a look at an average install crew.
Okay. Because
all we're going to be doing is talking about averages, because if you have 5 install crews, some work quicker, some work slower.
Right. Absolutely.
But we want an average. We love numbers and stuff and trying to get real specific, but at the end of the day, we want easy, what I call cookbook pricing for our sales reps to go out there and give a price, an investment to the homeowner on what the investment's going to be to put in their new system. Right. Uh-huh. So we figure out that average by obviously combining all the average numbers of what that labor rate is. Right. So let's say that we want that cookbook pricing with a furnace. Well, that furnace, right, it's going to eat up a day. It depends. If they got to do new flues with, take an 80% furnace out and put in a, 90% furnace in, then we have a little bit of extra time. However, I still price a full day of putting that furnace in.
Well, I do also, and the reason that I do that, and this might not be right, I don't know, maybe I'm doing this wrong. I do it because in my mind, I don't have, like, I can't put another guy, like if it's 3/4 of a day, I can't put that guy on a quarter day's worth of work somewhere else.
Yeah,
he's done for the day pretty much, unless he wants to take a second job and work overtime.
My recommendation on payment of install crews is based upon a performance basis.
Yeah. Okay.
I've had technicians make 120,000 or installation crews make 110, one person. So because they're knocking it out, and their quality hasn't diminished, and their callback rates are less than 2%.
Yeah.
Right?
Hey, Jim, we got a couple questions here. Before we get into anything else,
Sure.
I want to make sure we go back on. So I'll put it on the screen here so you can see it. So we all need to know our numbers. So for a small business, would you recommend outsourcing all the accounting or doing it in-house? And what are the pros and cons of either?
Great question. So here's what I'm going to tell you. I love numbers, but what I do hate is bookkeeping. And what I do hate is taxes. So I strongly recommend to everybody that do what you do best and delegate it to somebody else. Outsource your accounting, outsource your payroll, especially because there's some advantages, especially if you get into companies that are PEOs. You know what I mean by that? You know what those are, right, Tersh, Josh?
Mm-hmm.
I don't know if I do.
So you're basically leasing they're your employees, but you're basically leasing the employee from like an ADP or a Paychex or something like that. But I recommend outsourcing those simply because now they're on the hook for any mistakes and things like that. Now, you still have to keep a tab on everything, and this is where this freedom goes. I can be in Florida, down in my condo in Florida, right? And I can still see the numbers based upon I don't even need to see a profit and loss. I can look at my KPIs and know that we're doing fine, right? So hopefully and pros and cons. I mean, and I don't think it's really a con, but what you'll find an owner say a con is I don't have control of my bookkeeping and stuff like that.
Here,
well,
let me
that's
share.
Probably a good thing that they don't.
Well, let me share a con in my mind. That's a recent con for me, and I think I shared it with Josh the other day. But there are things that come through that I catch. If I have my hands in things, I'm like, whoa. That's not what we were quoted, blah, blah, blah. Like, or we have recurring services. We have some subscriptions, and one subscription snuck up. They increased their prices, doubled them. And the bookkeeper that we have that's remote, or actually the CFO, they just paid it and didn't realize that I didn't approve the fact that it doubled in prices. And that went on for an entire year. Right. And we overpaid by, almost $20,000 on stuff. And that was something that if I had my hands in it, then I would have caught it quicker. But I also blame myself because I more frequently I should have been going through all of our expenses and stuff. But
and that could be so.
Everyone will reach a level to where they can bring it. Now, let me rephrase what my answer is. The normal, 90% of air conditioning companies are less than $2 million in revenue. Everybody knows that, right? The data shows us that.
I didn't know the numbers. I assumed it was more on the small side than under 1 or 2 million.
And the thing about it is that once you do hit a certain wall, I call it walls because we're all trying to get over that next wall, right? What I see is that now it makes sense for somebody. Now, keep in mind, a CFO type person that can do the bookkeeping, that can do all the things to get that prepared for the CPA, to where the CPA just comes in and signs and moves on.
Yeah.
Right. Is going to be quite an investment because you want to be able to trust that person to handle all your books and everything. Right.
Yeah. Mm-hmm.
But it makes sense at some point where that falls into line of putting it in-house. But I don't recommend anybody doing their own taxes. Right. But I also recommend somebody actually advising them on their accounting and getting that consulting from somebody that's an expert in tax liability and things like that. My job is to make you pay more taxes than you ever have to the IRS.
Yeah.
Because that's a good thing, right? That means we're making money.
Right.
That's the accountant's job is to decrease your tax liability.
Yeah. So we've had several tax lawyers and CPAs on the show. And that's something that I challenge you to have as someone who you regularly communicate with, not just once a year, here's my taxes, or a couple times a year, like here's my paperwork, sign off on it. And then, because if they know what your plans and goals are for the upcoming year, they can advise you on, okay, you need to make these purchases throughout the year too.
Right. But Tersh, to go into a little bit further, what you were talking about and catching those surprises, you're not going to, again, tomorrow, if you're a business owner that's still working in the company tomorrow, you're not going to just wake up and say, I'm totally out. It's not going to happen, because you're going to have to fill some kind of role that puts you in an advantageous and as an asset to the company, whether it's, the service manager piece of helping the service manager review invoices, review all those things, because the owner can't just kind of step away.
Yeah. Delegation by abdication. That is the worst thing in the world. And I'm guilty of doing that. Like, oh, you got this, peace. Like, I'm not checking in on you anymore. And then all of a sudden it's like, like,
keep in mind, I said without the successful is one without you in it.
Yeah.
You should be on it, working on the business.
Yep.
Right?
I have a point to make if you're out, especially if you're considering outsourcing. First of all, I think outsourcing this stuff, you need to have a consultant that knows the industry and the benchmarks and the KPIs so you can actually track that. But set a day in your calendar every month.
Yeah.
Like maybe the 15th of the month or something. After the financial statements are done, set up a call once a month, especially until you start to understand this stuff yourself. Go over it with somebody who really knows this stuff and can advise you.
Honestly, I would challenge you to do it more than once a month. I would do it.
That's minimum once a month.
I would do it the first week of the month, so that you and your bookkeeper, CFO, whoever that person is, your accountant, can go over all the expenses and be like, okay, this needs to go here, this needs to go here, this needs to go here. And then after the 15th, or whenever they've finished putting everything in and finalizing the books, go over it again and say, all right, this is where we are. This is what you got to do, blah, blah, blah. Have that conversation. But like for us, when we're using, so we're on Service Titan, and so we class everything for labor and everything else. And I don't want to get in the weeds with QuickBooks and anything like that, but like we spent 2 solid months of testing and having constant conversations. Okay, that's broke. We need to fix this. We need to change that. We could have really been in bad shape if we had just said, do this, and then left it alone, because what we said is not what came out of our mouth. Like what was coming out of our brain was not coming out of our mouth. So we had to have constant communication there for a good bit.
Right. So let's delve into some numbers here, and let's make sure that we all, the people listening in and know exactly hopefully I answered this gentleman's questions. The pros are obviously it. I'm dumping and delegating something that is, I don't want to minimize it, but that is busy work. It's data entry from a bookkeeping standpoint, right? However, the analyzation of the books is what you don't want to give away, if that makes any sense. Because if you have real-time accounting, whether it's weekly, you're going to catch those things, Tersh. You're going to catch all those things.
That's great point.
To make sure that nothing's ever 100%, right? So, and Josh, to your point, you would like to know and deal with somebody that knows the industry, but they don't. Here's the difference. They're going to know what the average company does, but they don't know what a successful company does.
Oh, that's another great point.
That's one of the points. Now, everybody feels that's tax time, right? When we do our taxes and the accountant gives us our taxes and we're complaining, there's a thing that we got to fill out called an NAICS code. That's where the industry gets all the data, not only for audit purposes for the IRS, but this is what the industry average is doing. Now, I caution everybody to look at when they get those and say, well, you're doing really well because, excuse me, you're doing 2% higher than the average in the HVAC world, when the HVAC world's reporting 5 to 6% net profit before tax, right?
Mm-hmm.
Well, keep in mind that's the filed tax form.
Right.
We all look and know where our real ones are at, and then we decide and say, hey, we need a new truck. We're going to go ahead and buy that. We need a new this, because that's what we do. I'm not a big fan of buying something just to get a tax credit.
Right.
Because the IRS will do that all day long with you. Hey, all I got to do is give you a quarterback for every dollar that you're spending. I'll do that all day long.
Mm-hmm.
Right. But that's where I think those numbers are skewed. But that's where we get those industry averages. Right. But I'm looking for successful companies. I'm not looking for the average company. I'm looking for the successful companies that are consistently in that 25, the 20 to 25% net profit before tax, because that's where McDonald's, that's where Home Depot, that's where all the big major corporations operate in that realm.
That's a great point. Yeah, no, like he said, it's and this is something that, I literally have it on my calendar once a month now that I've had some training and stuff to go through our numbers, but we go through our numbers once a month, every single month. And honestly, I look at QuickBooks periodically through the month too, just to make sure things are okay. But it's so important to know that stuff. And I know some people that I talk to regularly, they outsource their books, and maybe the fit wasn't perfect because the person wasn't getting them their numbers or their statements on time. That needs to be something you need to set that tone right from the get-go. If you have any sort of a remote arrangement where I need it by this date, and we need to have a call either on that date or the week after or something, set that arrangement, especially as you're growing your business, because this is literally the most important part of your business. If you don't know your numbers, you're never going to be able to grow, and you're never going to be able to get more help.
And I would caution you also, if you're relatively new to this whole thing, if you're new to outsourcing a bookkeeper and you're new to the business side of things, don't assume just because they have a bookkeeping remote business that they know what they're doing. I fell into this trap early into my career. I was like, I don't know QuickBooks Online, so I want someone else to do it. Well, then I had an audit 6 months after I had hired this person, and the person auditing it was actually a guest on the show. And he was like, bro, what in the hell have you done for the past 6 months? Like, this is just like a kindergartner just put this stuff in here. I was like, okay, good. Cause I didn't understand anything that was here. So I'm glad that it's not just me. And if that would have gone on for a couple of years, I could have been in a world of trouble for sure, especially come tax time. But he fixed it for me, and went back and fixed everything that they had messed up. And so don't just assume that they know what they're doing whenever you just because they do remote bookkeeping, because they might just be a data entry person, and garbage in is garbage out. So
right. So getting into the numbers now is, if you're looking at your P&L statement, you have an income, then you have your cost of goods. My company, my coaching practice doesn't have cost of goods, right? I don't sell products. I sell what's in between my ears, my knowledge, right? But those are direct costs. Those are payroll. I consider those all direct costs to income. Now, some accountants will drop that below the line, what we call below the line. But my income minus my cost of goods, which is labor, supplies, all those things, that will give me my gross profit before tax. Now, everything else below the line is expenses that are paid regardless if there's any revenue brought into the business. That's your leases, right? That's your payments on your trucks, your tools, that your admin staff, all those things. So that's what we call overhead. the things that we need to run and operate the business on a daily basis, even though there's no revenue coming in, especially in the world of HVAC, where you have the states like Florida, where you're in Georgia, you're kind of in between, and you don't really need, heating, air conditioning, and things that. So,
yeah. So like we have 3 months out of the year that it's just 70 degrees outside.
Right. So you gotta think about those things, take those things into account, right? So I'm gonna put this up, and where'd it go?
Yeah, once you share it, I'll add it to the stream here.
Real quick, Jim, George Childers in the Facebook live stream, he asked, elaborate some more on increasing capacity, please. And I don't want to dive into a rabbit hole too much about that, but back earlier in the conversation, we were talking about increasing capacity is a way to reduce pricing or our costs. So our pricing can be lower than what it is now. You want to dive into that?
You got that, Josh? Because I'm not going to be able to see you all as this is up on my screen.
Yep, it's there.
So what I mean is that if you know your numbers, let me think about this the way that makes it very simplified and clear. Okay. So increasing capacity is I base my numbers off of
here's the way that I would explain it, and I could be completely wrong on this, and if I am, just correct me. So my overhead expenses are pretty consistent every single month.
Yes.
And if I have one guy that has to cover all those overhead expenses, then my pricing has to be $375.
Correct.
Well, if I have two guys doing it, then my pricing could be $275 to cover the same overhead expenses, get the same profit, because they're going to bring on some overhead expenses, but they're not going to bring, like, you can't cut it in half, but they're going to bring on some overhead expenses. But then if you have 5 people and there's not necessarily like a huge influx of more overhead because of having to have more office staff or anything like that, like if you can keep the same overhead, theoretically, your pricing would be next to nothing because you had 5 people versus 1 person doing that same task.
Correct. And that's the spreadsheet that I just brought up. It's kind of, he's like clairvoyant, right? George is clairvoyant. So everybody can see this, I'm assuming.
Correct?
Yes, that's correct.
So watch when I change, and what I want you to watch is the break even for everybody, and the daily break even and all this other stuff over here on the right. So if I change that and increase my revenue producers, now my break even per man day is lower. You see that change?
Yep.
Yeah.
Drop down what, $100?
Yep.
Something like that.
Yep. So that's what we mean by, now keep in mind there's some other things that if you're not keeping your guys full, then we have a marketing issue. Right, Josh?
Yep.
So
give me a call.
Right. So, there's something, that has some teeth to it of your salesmen keep on selling. As long as they're the right customer, keep on selling.
Yeah, right? As long as we're priced right.
As long as you're priced right.
Yep. Don't give it away.
That's hopefully I've answered George's question just with this spreadsheet on how, and your very simplified explanation, right?
Hey, Jim, with our notes, would it be possible to get like make a copy of this, and just if people want to play around? I mean, obviously I know you probably have some stuff on the back end of the spreadsheet that makes it all work. I don't know if we could do anything like that. Just if people want to play around with their numbers, and maybe they know their monthly overhead and their average gross profit, just kind of want to play around with this a little bit and see what it looks like.
No.
Or do you not recommend that?
It's $1 million question there.
So here's the challenge there. I can probably set them up with some certain securities on there to be able to do things, but so
they don't destroy your pretty spreadsheet.
Well, it's, sometimes we all have proprietary information, right?
That's 100% true. Yep,
sure.
yep.
So, but, I don't mind. They can give me a call, and I don't mind spending some spending some time, going over this so that they can understand it. But, I always say there's some things I can give. There's some things I would love to give this spreadsheet away for no cost at the end of the day.
Oh yeah.
But they have to understand their numbers first.
Yeah. Garbage in, garbage out.
Right.
And then we're all gonna blame Jim because we got garbage out.
Bingo. Bingo.
Can I ask you a few questions about KPIs and your thought processes or your thoughts on what the target should be?
Yes, I stopped sharing that, by the way, so I can see you all again.
Perfect.
Yep. So let's go ahead, Tersh.
So what should you think? What do you believe the gross profit per man day should be, or is there a? There
really is no. I think from a gross profit percentage, you need to be at least 50% or higher.
And then how about
that's a general statement because I can't talk specifics because everybody else's their gross profit per man days are going to be different based upon what they pay their guys and things like that. So do you find
let's say you figure out the gross profit part when it comes to like the actual KPIs on how many service calls, like you start diving into like the really deep numbers, how many service calls, what's your average ticket, average sold,
and that's what I can give you. I've got some information that I can give, like what's the targets that you want to be able to hit.
Yeah.
From a general purpose, right? 4 calls a day on a service technician. And that's probably at about 80% capacity. Right?
80% capacity.
Well, my pricing is based upon in the service industry 50% capacity.
Okay. Because
I know that again, service work, even in the northern part of Kentucky and touching Buckeye land, we're still not being able to sell all of our hours into, the 100
travel time on the phone with the office, stuff like that, lunch.
Right, exactly. And then it also gives me an idea if I've got a tech that's running 5 and 6 calls a day on a continuous basis.
Oh, they're burning you out.
I need to hire, right?
Mm-hmm. Yeah, either that.
Two different. Go ahead.
Either that, or they are burning through your leads. They're burning if they're running 6 calls a day, 10 calls a day, and they're all diagnostic onlys or consultation onlys, we're gonna have a conversation.
Well, I've seen that
process, right?
Being like the dispatcher and handling the board and everything else in my past, I've seen that. As soon as I know that days are gonna be late, because it's crazy. Our marketing's been great, and all of a sudden it's really cold. Like today, phones are blowing up. Like you take what you can do and you just try to help whoever you can. I know as well as everyone else here, as soon as it gets busy like that, what do technicians do? They fix it and move, because they know they're going to be out till 8, 9, 10 o'clock, and they want to get home at some point, which you can't blame them. But that's also why your repair pricing needs to be in line with that too, and probably have some kind of an idea where, hey, if it's really busy, we're going to be paying overtime. All this stuff has to be factored into like maybe a level 2 or tier 2 pricing structure when it's super busy. This stuff gets really deep in the weeds, and I love these conversations because there's so many things that people don't think about. They're like, well, I'm just going to be $95 an hour. I'm good with that. Okay.
And we're not going to be
how did you come up with that?
And we're not going to be able to cover everything in an hour here, right? So, those are things that we can talk about later on. But
I think Jim just invited himself back.
Yeah.
He's definitely got to come back on the show.
But the other KPIs, Tersh, is just general terms. You're looking at average ticket.
Yeah.
That's hard to say. But when you look at what I can tell you is a service truck should be able to produce between $250,000 and $300,000 a year.
Here's one thing that I will challenge people with, and I can only do it because I was in this boat. So I came to my small group that we meet every Friday, couple other business owners, with this badge of honor. I was like, dude, our average service ticket is $885. And I was like, that's where we're at. Like, boom, big dog in the room. Like, guess what? We're at $8.85 a ticket.
Mhm.
And the guy there's a buddy of mine, he's not actually very far from you, but he was like, well, I would say your ticket price is way too high. And I was like, what do you mean too high? I didn't think there was a too high when it comes to your average ticket price. He said, how many leads are you flipping? And they all knew that was my challenge. I couldn't get the text to flip leads. And they were like, you're not flipping leads. Your guys aren't flipping leads. They're just fixing every call you go on. And I was like, damn it, man. Why you got to be right all the time?
Well, and
it's so
again,
true.
You know, get into different scenarios with the sales process, but that's where it comes back into just managing those processes.
Yeah.
And then you take the process and say, okay, here's what the deal is. There's a breakage there. We need to improve that. But then comes what you as a business owner need to do, and that's coach your employees.
Yeah. Oh, yeah. And that after that point, I mean, I think it's dropped down to $500 and something an ticket now average, but the leads are getting flipped more. Where like we created an incentive program, and also we have rules that like if it's over this age and this dollar amount, leads got to be flipped, and so that's changed up a lot. But just knowing that, but I never would have known that was one of the main reasons why we weren't getting system replacement leads flipped over to us if I wasn't tracking that KPI
right
to start with.
And keep in mind, those numbers is just like the number I'm going to give you on an installation crew. They should be able to put with no problem $1 million worth of revenue in.
Oh yeah, absolutely.
Side, right. But I hedge that because it all is going to depend upon your average install price.
Oh, that's true.
Now, you sell higher. Now, in Kentucky and Ohio, the utility rates are so low and the incentives to buy high efficiency is so low. We sell up here on comfort.
Yeah, got to.
High humidity. It's humid, not as humid as Florida, but it's humid here in the Midwest, right? So, you know, with financing and things like that, you know, you should be averaging a high. And again, work smarter, not harder. The higher your average ticket,
the less jobs you have to do.
Change.
That's right.
Pure profit off those things, right? Yep. And that's why I say, you know, and then here's at the end of the day is this: your job as a business owner, or whether you're to give you your dispatcher, I need to sell you. You need to sell these slots.
Yeah.
If you know your numbers, you can actually run a special. You can actually do a loss leader or whatever you want to do to get in the door.
Yep. As long as your technicians are converting.
You and I talked about that on the phone yesterday. We didn't even get into that because we've been talking about so much other good stuff. Is everyone thinks, well, I have a service fee. That's my service fee. Like nobody's touching that service fee. If anything, it's going to go up, but you don't realize, like, if you're not busy, drop that sucker down, give it away, get in the house.
Why do you think gas prices were low in 2020?
Yep.
No one was driving.
That's right.
Yep.
All these things, guys and ladies, is this. We forget the fundamentals of business. And the one thing that they teach in any Econ 101 class is that the theory of supply and demand. If your demand is high, your price has to because your capacity is going to reach. You can max out, right? And you can, you know, it's just like the RPMs in a car. They start going into that red. You're like, oh no, I'm stressing my motor. But you got to go up in speed in order to drop those RPMs down, right?
It's true.
But we tend to get away, and it's been bred into our industry, you know, as far as the plumbing as well, and that we all have to be the cheapest guy out there because we're all not in new construction.
Nope.
Right? We're providing a service that actually comes to your house. Right?
Yeah.
We're the guy that can be the savior when it's it's hit me at home. So I'll give you an example. I used to have a feeling that because I grew up without air conditioning, right? My parents didn't have air conditioning until I was a senior in high school in Lexington, Kentucky. They had a window
waited
unit.
until you were gone before they splurged.
They had a window unit, right? so, but you know that people that don't have the use of their arms and their legs, they're paraplegics and things like that.
Yeah.
Their body temperatures can't get up past a certain point. Those sometimes can be emergency situations.
That's a good point.
You know, so we have to. We're the only ones that do house calls anymore. Think about it. We come to you, and you have to atone for that. And way lately is traffic.
Windshield time. You really need to be tracking that, and that's something that a lot of people don't track is, travel time. What's your average travel time? And it's not necessarily like, okay, it needs to be 5 minutes. It needs to be 15 minutes. It just, you need to know what it is so that when you're figuring out your pricing, that's on unapplied time.
Well, and then also where people get caught too is if they call it a diagnostic fee. I really don't like that term.
We use
charge.
We call it a consultation,
right? But I always coach my clients in their dispatch to say, look, or their person answering the phone, get a little leeway because you might have to look a longer time. Typically, 90% of what we find can be diagnosed within 15 to 20 minutes of arriving on site. However, there's some things that we run into that just don't make sense.
Yeah.
Right. So then we're going to have to step back and say, okay, Mr. and Ms. Klein, I can go further and further into this. Right. But it's going to cost you X amount I always say, if we can find it, it just depends upon how you term it and things like that. That's another discussion for another day.
Oh yeah. That's a rabbit hole we can dive in for sure.
Right.
I appreciate all this information, Jim. And there's the people in the comments, they all appreciate it too. I mean,
George, thank you guys for bringing your questions. George has always got something good for us. We appreciate you guys interacting with us. And if you guys that listen to this want to see that spreadsheet, go on. These videos are always on our YouTube channel and our Facebook group. So go look at those. And
they can call me or email me, and I will try to. I mean, the only caveat I will give them is I will give them a similar spreadsheet that they can work on, but they're going to have a conversation with me before.
Oh yeah.
And Jim, if you want to, I have your email and number, so I'll get that to Tersh so we can get that in the show notes and stuff like that. Right. So people want to call. Otherwise, his website's been scrolling at the bottom of the screen. It's now I don't remember what it is. It's
called PSGNKY for you folks in Wisconsin. Yeah.
Yep. There you go. So you can certainly visit that too and reach out that way. I know he's usually LinkedIn, Facebook. I mean, you can probably reach Jim a number of ways, but a lot of really good information. He's been doing this a long time. Jim and I have been talking on and off for probably a couple years now. So always good to catch up with you, and really appreciate you bringing some insights, some really good conversation topic today.
Well, no problem. I sound like a Midwesterner to people below Kentucky, and sound like a good old Southern boy for the people up north.
You sound Southern to me. So
see.
Tell your client, I know you're on site. Tell your client thank you for lending us a few extra minutes here, because I know we went over when you were kind of supposed to start with him. So thank you.
Just so you know, it's not an HVAC company; it's a landscaping company. So
that's cool.
We're just selling a different widget, right?
Yeah. Oh yeah.
So
still got to know your numbers.
On the owner and selling time, right? Time for money, and
that is
providing a service, and we've got to. It's up to guys like us to really kind of not glorify what we do, but show the importance of what we do for our economy, right? If things go down, there's a lot of problems that can go down, and we can fix them. So,
absolutely.
All right.
I appreciate it. We appreciate it. And if anybody has any questions at all, don't hesitate to reach out to Jim, Josh, myself, and we get you connected with Jim. And until we talk again next time, I hope you have a wonderful and safe week. And next week, we will actually be at the AHR Expo. So
if you're there, come say hi.
Yeah.
Check us out.
Absolutely. 100%. All right. Be good. We'll see you.
Go dog.
Thank you for listening to this episode of Service Business Mastery. Now that you are equipped with essential business advice from this impactful conversation, you are one step closer to becoming the successful owner of your dreams. If this episode has been helpful to your business journey, don't forget to subscribe to the show, leave a rating, and share it with other owners as well. Visit servicebusinessmastery.com to learn more.